What's up traders, Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It's June 28th of 2022. We had a pretty wild trading session today. We did have some pretty big rejections in the headline indices. Today I did a combination of offensive selling as well as defensive selling. We're going to talk about everything that went down today in terms of the price action. We're also going to talk about what we are looking for moving forward. Without further ado, let's dive into your video. All right, so box scores for today's session. We had the S&P 500 to finish down 2.04%. Pretty large move to the downside. NASDAQ QQQ finished down 3.05%. Our IWM small caps were down 1.88%. Pretty interesting that the smalls actually outperformed the megas today. The dogs of the Dow, they actually outperformed to the downside. They were only down 1.6%. And our ARK Innovation ETF, which I am still long, my January 2023 calls, except I took a target on those into strength this morning. We're going to talk about that. This index finished down 5.87%. Team volatility expanded across the board. We did have very negative breadth. This is pretty much washout status. We had a volume of 25.5%, and my trend model actually flipped from a +1 reading to a -1 reading. So objectively, the market did take a big step back today. Crude oil month-to-date performance. We've been tracking this like hawks because we know the lower crude oil prices go, the lower the inflation numbers are going to go, and the more dovish the Fed can be. This was also very problematic from very early on in the pre-market. We saw that crude oil was rallying, and now crude oil is only down 2.61% month to date for June. Now keep in mind, crude oil was up 12% for May, so that's still a pretty big dichotomy. It's a big deceleration. But earlier in the month, crude oil was down, I believe it was somewhere around like 8 or 10%, and it is really rallying off the lows. Finviz heat map, the exact configuration that we do not want to see as bulls on the market. Energy was leading the market. All these names were positive, but then a lot of these mega cap tech names, they really got brutalized. Look at Amazon, look at Tesla, look at Nvidia, and that really tells the story. All down over 5% a piece. Our top sector is still KWEB. Keep in mind, Asian markets, they were positive overnight. We had Europe that was positive, Asia that was positive. And typically what happens with the KWEB is even if those Chinese equities are positive in their own local market, if the US market gets very weak, the Chinese ETFs will also turn red. Definitely noteworthy that group is still showing relative strength though. But then some of the other leadership groups, such as biotech, got brutalized today. The ARK Innovation ETF, brutalized. Solar stocks, brutalized. So really nothing was spared. The leading stocks got sold off, and energy was the sole survivor over here, up 2.7%. Best performing style factor on the session was high div low vol, only down 0.4%. Worst performing style factor was growth, which was down 2.84%. That certainly makes sense given the context of treasury yields that are moving higher and crude oil prices that are also moving higher. S&P 500, take a look at this price action. We had a firm rejection at this 20-day simple moving average. The happy path for the market would have been we consolidate for a couple more days, everyone starts losing their mind because the market's not really going anywhere, and then we push above the 20-day simple moving average, and suddenly we're traversing this value area and we're approaching that 50-day simple moving average. We did not get that in the slightest bit. We actually had some very wonky price action, and our Pristine Capital trading community was all over this. We are hawks in terms of following the price action, following these intermarket relationships, and from very early on in the morning, we were all communicating about how, hey, yields are moving up again. Energy is moving up again. Why is the market pumping so much in the pre-market and really in the first 30 minutes to an hour of the session? So we immediately identified, hey, this is a very odd configuration, and I actually went ahead and did some offensive selling. This was my first offensive sell this morning at 8:39 a.m. And this is the benefit of trading in a community where I noticed it was a little bit weird. And then one of our guys was like, what's going on? This is so off. And immediately I was like, hey, I need to do some offensive selling. I closed out the remaining 75% of my TQQQ common shares for $27.35. I had paid $24.19. So I took this off for about an 11 or 12% winner. And I wrote here, nailing down decent profits in the face of rising treasury yields and energy prices this morning. So it was pretty clear cut early on, even in the pre-market, that there was something wrong. And part of my strategy, and one of the things that I'm looking to improve upon, as I continue my development as a trader, is nailing down these decent profits. And one thing that's so important is when everything is green in your portfolio, you do want to be taking some targets on those exposures. Because what you don't want to happen is the market's going up, you're getting long, and you're riding, and then when the trend turns, which it always does, the market's continuously moving in these up and down cycles, and then when the trend turns, you just start losing every single day, and you're not really making any progress because you're just giving everything back. So yeah, I took the chance to just sell that into some morning strength, and then I also sold off part of my ARK Innovation ETF, January 20th, 2023, 40 strike calls. I closed those out into the morning pump at 9:46 a.m. Again, something just seemed very off. So into that strength, closed a portion of that position out for $10.80. I had paid $6.85. And again, I just wrote here, nailing down decent profits, because that's what it's all about. We're never, one of my good friends, he's also in the community. This guy, he's a former floor trader. He was in the treasury pit. And he always tells me, you're never going to sell the top. You're never going to buy the bottom. Like, it's never going to happen. So it is super important to just nail down some decent profits. That is really what it's all about. Now let's go back to the chart, and then that will segue us into the defensive selling that I did later on in this session. We have this 5-day EMA and the 10-day EMA. I don't think anyone knows what's going to happen here, because crude oil could start falling apart tomorrow again. The bond yields could start moving lower, and maybe the market bounces. On the other hand, the exact opposite could occur. Really, I'm just following my system and my trend model, because I know that I do not know what's going to happen next. Take a look at what the hourly chart's doing. We were so extended away from this weekly value area. Now all we're really doing is pulling back into the top of last week's weekly value area. It's pretty insane how it might feel like this is a big drop, but this is really just like routine pullback. NASDAQ, and again, I sold off my TQQQ position pretty much right on the highs, which is fantastic. I'm super grateful. So take a look, we pulled down to this bottom of the monthly value area. And again, you might say, hey, maybe this is exactly where we find support. And that could certainly be the case. It's very tough to see the future. All we can do is act with the information that we currently have in hand. Russell 2000, this one as well. This was actually the strongest of the indices, aside from the Dow Jones. Pulled back into that 5-day EMA. It's still inside of this monthly value area, although it got rejected by the 20-day simple moving average. And the Dow Jones is actually rejecting off of both the 20-day simple moving average as well as this monthly value area. Check this out. This was some more defensive selling that I did later in the day. So at 10:45 a.m., I noticed that the energy ETF, it had hit the top or the bottom of the monthly value area, and it was bouncing off of it. So I said, hey, energy's had like this counter trend move for 3 days. I want to place some put options on this XLE ETF. I bought some August 19th 75 strike puts for $425. And I put here, so far this group looks like it hit a wall at that monthly value area low. And what's very interesting is XLE barely moved anywhere from where I put this trade on, but my put options are up about 20% since I put them on at 10:45. And I think what is likely happening is the implied volatility really expanded out within this XLE ETF. I did try a scalp trade. I got long the SPY July 15, 383 calls for 847. Took that position at 115. Later in the day, into the close when my trend model flipped negative and I knew it was going to close there, I closed those out for $7.42. Again, I had paid the $8.45. I think the market could still rip into month end, but I'm going to respect the original plan for this trade and the trend model and pull it off into the close. That's super important if you intend to put something on for a scalp. Yeah, I would say that trade, out of most of the trades that I do, I would say that one was like lower quality than the rest. So you just want to get rid of those mistakes as quickly as possible. Let's take a look at some of the market leaders and just see what they did today. So we'll go first to PLAB, which yesterday had a fantastic move. I entered this position pretty close to the lows of the day yesterday, but this one, look at this candle. There's nothing friendly about this. This is really just, hey, there were institutions that sold this thing today, and there were very few buyers out there, and we sold on pretty high relative volume as well. So it's not an encouraging sign. Then end phase. It's another one. I'm currently long. I'm still winning on this position, which is great, but also a very similar bar where it's just, this thing was outright just sold today. Nothing, no ifs, ands, or buts about it. And when you see investors start to sell off the best stocks in the market, that can often be a tell that some not so good things are to come in the future. DQ, Chinese equity, very strong. Same exact looking bar, down 6.35%. Keep in mind for this name, it's just a pullback to the 5-day EMA. That's nothing crazy at all. JKS, this one actually fared pretty well, all things considered. It was only down 2.25%. It's still elevated even beyond this 5-day EMA. So I would say this one fared the best out of all these leaders. Given the fact that we're seeing energy moving higher, we're seeing treasury yields moving higher, headline indices are kind of breaking down, the leaders are breaking down, my trend model flipped to a -1. It's super important. It's all about just being able to bend with the market. I don't know what tomorrow's going to bring. I don't know what the end of the month is going to bring, but I know that I'm going to follow my system. I'm going to manage my risk, and I'm going to live to fight another day. I'm actually super excited just to see what the river brings tomorrow and share that with you guys on the next market recap video. If you enjoy this content, please go ahead, like the video, subscribe to the channel. Our goal is to get to 1,000 subscribers. If there's something that you would like to see in the videos, something that stood out to you, leave a comment as well. That really just supports the channel and everything that we're doing with Pristine Capital. Have an awesome night, everyone.